Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC TV 18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. It's a Thursday morning. There is so much news flow, so much activity. The hope here in India is that maybe the market's already paid the price for what is to come, which is reciprocal tariffs. I mean, the hope is it is, what do you call it, buy the rumor, actually sell the rumor and buy the news. So we'll see if that really works out. Yesterday, of course, was a good session because from the lows, we picked up quite a bit. I'm Prashant. With me, my colleagues Nigel and Rima is with us today. Guys, hi, good morning.
Hi, good morning. It's going to be an action-packed day. It will be dominated by Trump's reciprocal tariffs, the conversations between Prime Minister Modi and Trump. We've got the weekly expiry for the Nifty 50. So brace yourself for news, volatility, noise, and hopefully a rebound.
Well, that's right. And from yesterday's low, it was heartening to see at least we did see a bounce from there. And at least the breadth of the market did improve. Yeah. After a while, we had 1,000 stocks that were advancing. So, you know, clashing on straws, but at least some kind of positivity, Prashant.
No, absolutely. And I think, you know, the markets, there's no doubt, it's extremely oversold. And we are kind of now running into sort of news flow, etc. So is it going to be the classic sort of, you know, you've come into this event with all the negativity you can. And now that the event is really in front of you, the market starts to turn a little bit, maybe even if it's only a bounce. But let's just start from the top because, as I said, there is a lot of news flow and a lot of news activity. So this is the White House press secretary who made this comment, and it'll come up on your screen. Reciprocal tariffs might come specifically before PM Modi's White House visit on Thursday, visit tonight. Remember, Prime Minister Modi is in the U.S., and he's supposed to meet Donald Trump, the U.S. president, tonight. You know, and this is the statement which is coming through. This could be posturing. This could be pressure building up to try and put pressure on the other side. But that's essentially what happened. And Trump confirmed that reciprocal tariffs could be signed today or tomorrow, which when I say today, tomorrow, it could be because he said it last night. So it's basically tonight, by tonight, which is going to be New York morning. That's what is the big news flow. I think it's a dominating driver in that sense. If you look at the dollar INR and in offshore and NDF markets, onshore we will know today, but it moved between 10 and 20 basis points. It went up, the dollar rupee cross, which means there is pressure on the currency. And it's interesting, it was only the INR which saw this pressure. Most other currencies on the back of these reciprocal tariff comments did not move. And I think that is because many of these countries, so EU, Canada, Brazil, I'm not putting out what each of these leaders said, but they all last night, within the last 12 hours, expressed willingness to negotiate. And that is the reason why, and of course, we've not heard from the Indian side so far. That's the reason why there was pressure on the rupee, but not on these other currencies, you know, and we heard from them last night. The other big story, of course, was the U.S. inflation numbers for January. That came in very hot, 0.45 month-on-month in Jan. That's beaten expectations. That's above what the last month number was. And then, of course, we heard from Fed Chair Powell as well last night. And that essentially was that, you know, I'm just sort of shortened that sentence, but on rates he said, but we are not quite there yet. I mean, that sentence is preceded by when he said, well, we made a lot of progress, etc., but we're not quite there yet. We want to keep policy restrictive. So that essentially was Fed Chair Powell. 10-year yield price action was up 9 basis points to 4.62. Of course, I mean, yields first jumped when inflation numbers came and the tariff sort of threats, etc., came much later. But both, of course, put upward pressure on yields. Equities were largely unchanged, not very much there. S&P down a little bit, Nasdaq up a little bit. Oil prices pulled back about 2%. We're back at about $75 a barrel. The other thing which I think we'll need to watch out for is the Russia-Ukraine headlines, and I think they will continue over the next couple of days. Trump posted on Truth Social, the social media platform, that he had, and I quote, a lengthy and highly productive phone call with President Vladimir Putin of Russia. And will we hear something being sort of done by the end of the week at that security conference in Munich? And of course, the Treasury Secretary is in Ukraine, meeting with President Zelensky there. So that's the other big global headline into this weekend, which I think we'll need to watch. So just to tie in and close out the levels here. So yesterday the markets fell a lot, but we also saw a strong recovery which came through. The closing levels and the opening levels are largely similar. If you look at the Nifty candle, what that essentially indicates is it's a bullish, bullish price action, very bullish price action with regards to yesterday's candle, plus the oversold readings. I mean, you want to look at the RSI, you want to look at momentum indicators, etc. Markets extremely oversold. So you combine both these, and you get a sense that maybe a bounce is, I mean, even if it's just a bounce, is nearby, is around the corner. The initial hurdle when that bounce comes is going to be the 20-day moving average, which is 23,284. We left off at 23,050 yesterday. For the Nifty Bank, yesterday's low was a 61.8% retracement of the last bounce. It needs to protect. By the way, the Nifty Bank has not yet broken the 20-day. For the Nifty, 20 days the resistance. For the Nifty Bank, it's a support. 49,288 is the 20-day moving average for the Nifty Bank. And resistance comes in at 49,955 and 50,624. GIFT Nifty will give you a sense of how we are likely to start. It's absolutely tentative, undecided, 7-odd point change. Guys.
Well, we've had the longest losing streak on the key indices for now 3 months, with the Nifty and the Sensex down close to about down for the last 6 trading sessions. But, you know, while the Nifty has defended its 2024 low yesterday, or went there and then recovered from there, the mid-cap index is still below its January low. So, you know, that's important. So we're not out of the woods when it comes to the broader markets. For the mid-cap index, the low in January was about, I think, 50,875. And yesterday, the Nifty went down to levels of 49,357, and we still closed below the January lows on the mid-cap index. So that's something you need to watch. But other key important, indicators for our own markets, the CPI inflation, Lata will talk more about it. It's good news. January CPI inflation is eased to 4.3 versus 5.5% in the month of December. So month on month, it's cooled off, and that's positive news. That said, the FIs continue to sell big. Yesterday, they sold nearly 5,000 crore in the cash market, but the DIIs bought nearly 6,000 crores. So they've outnumbered the selling by the FIs. Today is also the Nifty 50 weekly expiry in terms of numbers. There's only one Nifty company which reports numbers, that's Hindalco, but lots of other important mid-caps like SJVN, United Brewery, Senco Gold, Nazara Tech, Mannapuram, and the stock of the day will be Kotak Mahindra Bank, and that's going to be, in terms of individual stocks, in the spotlight.
Well, that's right. Just a few positives that I saw overnight. One was the call between Trump as well as Putin, and they're talking about ending the war. That'll be good for crude oil prices. You had comments coming in from Trump as well as Musk, and he put it on Twitter, that calling for lower interest rates and also some kind of rationality with regard to reciprocal tariffs, both on autos as well as on pharma. So I'll keep an eye on these. These are some of the positives that I saw from the overnight cues. Well, moving to the data points then. The question is, at least in the near term, is there a near-term double bottom in place, which is important because the 22,800, 22,700 odd mark, that's what the bulls are counting on in terms of, holding out. The other important factor is yesterday we did see a bounce, and on the Nifty Bank, there was a bit of short covering that did play out, and that's why that recovered a goodish bit from the lows of the day, because the open interest was down by close to around 2.5%. The positioning on index futures. Yes, the FI is a net short, and they've added to those short positions as well. 6,000 contracts were added yesterday, 85% of their positions on the short side. And we were seeing for the last few trading sessions, and that's only getting more exaggerated from the FI net short positions. It's at the highest we have seen. If you look at the absolute terms, FI is aggressively net short, while clients, they are net long, but close to 1.5 lakh contracts on the long side. This is on index futures. Now, moving to stock futures, you'll say that, well, they added shorts on the index futures, but on stock futures, there was clearly a short covering bounce that did play out. So around 13,000 contracts are cleared out, and they added long positioning as well, telling you that stock-specific action will continue, and there'll be stocks out there that will outperform. The overall positioning on stock futures itself is close to around 60% of their positions are on the long side. So that's important as well. Well, moving to the options data then. Yesterday, the PCR went down to around 0.65. So besides the FIs being net short, because the PCR went to around 0.65, we did see a bit of a bounce that did play out, currently as well at the lower end of the range. Today's expiry, and call writers, they have been feeling confident. So, there's been aggressive writing being seen at both these two strikes, 23,000 call, 23,100 call out. So just punching in the data points, I'll give you the levels. On the upside, the 23,150 to 23,200, that's the level that, the bears will want to defend. So that's very, very important resistance. And the recent lows, the reference low as well, and going by the options data, this 22,750, that's a crucial mark on the downside. The Nifty Bank, well, you've got your reference out there. Yesterday, we went down to those lows of around 48,700, which is important, and the 20 DMA as well. So you don't want it to break this range. And finally, I was looking at the margin trading book that gets uploaded on a T+1 basis. And that comes out on the NSE. So we'll have to keep an eye out for the latest data point. But a couple of trading sessions ago, well, we saw a sharp drop out there, which indicated that there were some margin calls that did happen. And that's why the margin trading book did come down. You'll want to keep an eye out on this data point. But that could be one of the reasons why in the last couple of trading sessions, we saw intense pain in the broader market. So that's a crucial data point that we're looking at.